All right, good morning and good evening to one and all those who are joining from the Eastern time zone and the rest of the world. Kindly excuse me for a couple of minutes of delay. As I said, at times like especially the New York Open, it becomes sometimes tough to the volatile to just attain to the volatility, especially in gold today. All right, we are going to come back on the gold chart just in a while. Maybe we can touch base with Euro and Dow Jones first, spend some time there, and then we'll come back on gold. I think it's better to touch with the Dow Jones. Let's see what the story reveals now after yesterday's low. Remember, we were talking about not to get into the bull trap, or at least short-term traders can find some relief rally, but that is a technical bull trap and not going towards a new high. So it got to be careful when dealing with such situation. Let's see how the markets are behaving right now as we speak. All right, so okay, that's the story. Dow Jones up on your screens right now. And these are the counts which we were discussing yesterday. These times, let me zoom in a bit. All right. So it's still within the vicinity of completing the first impulse. Maybe today being Friday, I mean it should be completing its task today. Next week onwards, for those who are just tuning in, I'll just wrap up what we discussed in the Dow Jones, where 1, 2, 3, 4, or maybe 4 here, and 5, the first impulse of smaller degree, minute you mentioned here, looks complete or very near to completion. If we look at the, kindly excuse me if I need to attend, I would be muting for a few seconds the margin situation, and we'll be back again. Okay, so this is the support which we were talking about, which already has been taken out. I mean, it has tested. So in 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 the theoretical terms, when we used to discuss about support and resistances, we would say that okay, bears have scored a point here, and once the point is scored, they pull back. All right. So ideally, it's not a thumb rule, but ideally, what should happen from here is pullback rally should materialize on the north side, corrective three waves as highlighted here. It should take us to the next maybe week or so. That brings us to the end of March. Maybe firecrackers then begin the next series, or maybe April or mid-April or something. But that should be the bigger one. So, trading point of view, if you are an aggressive trader and if you don't want to miss on a couple thousand points or a 2,500 points rally, which is anticipated, then you might want to build a long position on a smaller time frame impulse rally with a very tight stop loss. Stop loss should be very tight, just below the potential low. Ideally, it should avoid trading today. Maybe another low could just form. A break above 46 187 would confirm a bottom is in place, and then you might want to go aggressively long with a very tight stop below this low. The potential target about 61.8%, and I would say to be a bit conservative, 47 400 is fair enough. All right, then you might want to get into another opportunity as well on the long side. So this is an aggressive story. For the long-term conservative side, the Dow Jones remains a classic case of sell-on rallies. Uh, so you might want to take a break rather than getting into this bull traps. These bull traps are technically, you never know, it can retrace up to the 38.2% and reverse sharply. You never know. There's no guidelines as such that is ideally should go to 61.8%. This is what we are expecting right now, but situations may change. And that's why this is called a bull trap. All right. So better you take a few days off. That's what is recommended, and then look to come back and sell around the 48,000 mark, 48,500 mark, with the stop just above that head. And the bigger picture, the bigger story is, as I said, we will discuss today. I'll give you a potential, just just a hint of what is coming up. This is where prices should be heading up all the way down 36,000 levels. Yes, sir. This is not a hype. It might seem crazy right now, but the charts are telling us a clear story that what we see on the charts here. I mean, if I can remove these Fibonacci and add the other ones, the fresh ones, the recent boundary, you might be up for a surprise. But it's all in black and white, all clear. There's no need to be surprised here. I'm just putting 3 clicks, not taking wave 3, 4, and 5, but you see the target here, 37,000. So I would absolutely be not surprised to see, uh, and that's so where we are right now, as we always keep on discussing, at the end of the impulse wave, the next is the corrective rally, and the path followed thereafter is another impulse lower, possibly towards the 37,000 mark. All right. So that's the bigger story in the Dow Jones. Till it should be followed by the SPX 500 and Nasdaq as well. Irrespective of what is going on geopolitically, but what is going on with the inflation, what the Fed might be coming up with, irrespective of all these factors, please be watchful. And that's why the title for yesterday was also avoid the bull trap in Dow Jones, please. All right. Most of the traders might be getting on the long side right now for another upside, and that is where the danger is. Okay, so having discussed that, we'll come back on this chart again on Monday. Now let's touch base with what Euro USD might be doing, and then finally we'll touch base with gold. An hourly chart is good enough for Euro because we have discussed the other stories up there. The first impulse and then a follow through in the around the buy zone around 1470. It dropped 30 points lower after that, but that always can happen. What we are now seeing is maybe an ABC corrective decline at the moment. Sometime later on, prices should push through those uh, levels up there. We'll cut short for Euro. It's nothing structural change. The corrective wave is in place or it's underway. It's not in place. Sorry, it's still underway. Potential target around 1670 and 1700 plus. All right. Bottom line for this structure to remain valid is 1.1440 price action. Prices should ideally stay above that to keep the bullish, a short-term bullish structure in place. All right. So, trading point of view, we have already suggested a potential longs with a stop loss of 1.14. You can now bring up your stop to 1.1440, reducing the risk by about 40 points or so. Targets remain the same as flashed here in the red. 1670 and 1780 or so. All right. Okay. Now, meanwhile, if you're liking these videos, you might stay subscribed and also leave your comments below, and also help spread the word here. We'll be meeting each day, Monday to Friday, possibly even in the weekends whenever I am able to, but definitely Monday through Friday at these times, 10:30 a.m. Eastern and 6:30 Dubai and 8 p.m. India, the rest of the world according to the time zones as mentioned these times. All right, now gold has been keeping us on toes because many traders still want to believe that gold has completed its downtrend, or it's done with the downside and maybe beginning to cut loose on the north side now. But tell you what, as okay, this is the chart we discussed earlier, correct? And we'll have to readjust some things. Okay, the counts have also been mentioned. We've got okay, let's go on a 4-hour chart for discussing the bigger picture first, and then we'll come back on a okay. This is where we are right now, sir. We've done A, we've also done B within the corrective ABC structure, and wave C might be unfolding right now as a potential impulse. Within that potential impulse structure, we might have already gotten wave 1, 2, and 3, and a bit of wave 4, maybe 50% of wave 4, and we're expecting price action to touch 47.80 possibly if it is still incomplete, uh, and then continue lower from there to complete wave 5. This is what we are expecting, sir, 4200 zone. And it is not something personal, it is actually the charts which are revealing the potential targets. All right, and 4200 is where wave A becomes equal to wave C. That's what the ideal situation is, but that's not the end. That's it could be going much lower as well. But at this point in time, if you look at the Fibonacci extensions of 1 through 3, then 4200 seems to be more likely. Maybe not at this point in time. And the reason why we are thinking so, or what structure that I'm seeing on the chart right now, is that wave 4 is expected to be sharper. Now we've got the first wave here, and we are possibly within the corrective follow through. It is 3 waves until now, so a revival from here would suggest that we've got a corrective drop complete. Let me zoom in a bit. There you are. So wave B, and it could extend through the C wave right towards 4780 at least, which is the 38.2% of wave 3. And not necessary it may stop there, it might extend a bit further, but there are two things that we can do. We can put a channel here, anticipating that a low is in place right now, and here's the upper channel region. So okay, the intersection comes around 4780, and the date is around the 23rd of March. So that brings us to Monday. So if we reach here by Monday, that would be an ABC corrective structure potential, I would say, not exactly zigzag, but even if it's a 3-3, it looks like a potential 3-3-5 into picture, into play. So once we are there in the zone of 47.80, then it would be nice wave 5 decline lower towards the 4200 zone. All right, so trading point of view, a much safer strategy to deal with the yellow metal and the white metal right now is to avoid going long. If you have to, you've got to be very tightly stopped for gold around the 40s, for 40, no, exactly 4500, just below 4500 should be a stop loss with the potential target around 4750. And this is a good potential buy entry, but you've got to be very tight stop. It's an anti uh, counter trend trade that we are taking. Ideally, not recommended. Should allow the wave structure of the correction to be complete and then go short actually. But if you have to, then this is the aggressive trade strategy. Stop right below that point. Trade 50% of your capacity, so your risk automatically is half than normal, targeting 4750, and then reverse through 4750 with a stop loss just below the first wave termination, just above. So that would be 49.92, maybe one or two or 5 points above that low. Because if wave 4 is in the making, it would not get into that territory. We'll discuss this on Monday as well when we come back. A potential short around 4750, 4800 zone, 4780 to be precise, and then a reversal towards 4200 with a stop around 4990 or so. Those are the two potential trade setups, aggressive and the conservative towards the trend setup. All right. So I think that could be a wrap for the day. And once again, I thank you all for tuning in. Please do give your comments and suggestions or likings if you have any, and help us being help us spread the word. This is for traders, by the traders, to the traders. All right. So once again, thanks for joining in. Have a blessed weekend, and until the next one, which is on Monday, these times, good luck to your trades, and God bless us. Goodbye.